Finally, almost 3 years after the Finance Ministry announced in its 2010 Union Budget that a new set of private banks would be set up in India, the Reserve Bank of India on Friday came out with the final licensing norms for these banks. There aren't too many differences, too many surprises. The Indian Central Bank almost stuck to its draft guidelines, barring two exceptions. One, in the draft guidelines, the RBI had said that entities with exposure to brokerage and real estate would not be permitted to apply for the license. Now, the final guidelines do not have that provision. And secondly, even though the budget announcement had said that private entities would be allowed to set up banks, but this Reserve Bank of India guidelines are saying that even public sector entities will be allowed along with the private entities. So these are the two differences. But you know, if we read between the lines, it's pretty obvious that Indian Central Bank is not comfortable with private entities with exposure to brokerages and real estates, because it says that every entity which wants to apply for the license needs to have an impeccable track record for 10 years, and those whose income streams are volatile, you know, and depending on certain streams which can go up and go down, will not be entitled. It automatically bars actually those with exposures to real estate and brokerage. And as far as the public sector undertakings are concerned, they would need to float a holding company, non-operative holding company, to own the banks. So it's essentially they cannot do this in the form of a public sector undertaking. They have to go for restructuring of the organization, which will not be easy for them. Now, if we leave these two things apart, what are the other salient features? They would need, an entity needs 500 crore net worth to start with, which is on the expected line. They would need to list the bank after 3 years, which is actually much more lenient, because the first set of banks in the 90s, they were asked to list the banks within 1 year. Then they would need to have a to maintain a capital adequacy ratio of 13% for the first 3 years. Foreign investment is capped at 49% at the initial stage, contrary to 74% which the existing players enjoy. So these are the minor things, but overall it's the guidelines, the new norms are on the expected line. Last date or the time by which the entities would need to apply for a new bank license is 1st July, which means they have time. But does that mean that we will see a set of new banks very early? It's certainly not, because Reserve Bank of India had said that RBI will go through their applications. Then there will be a committee set up to scrutinize the application, and of course the final say will be with the Reserve Bank of India. It has not given any time frame by which we would see a new set of private banks, and more importantly, it has not said how many of them will be allowed to set up banks. Like for instance, in 2003, when Reserve Bank of India for the second time opened the door for new banks, it did say that only a couple of entities will be allowed, and as and when it feels more confident, and if the experiment is successful, then in due course after 5-6 years it will go for a second round. Now it took 10 years to go for the second round, which is actually the third round. So when actually we will see the first set of private banks, and how many, it's anybody's guess. Will it happen before the current Reserve Bank of India governor D. Subbarao steps down in September? I'm not sure whether that can happen. It might even take longer.